And for many authors and creatives and coaches, this aspect of business is often overlooked. So with this being Black Creators Weekend, Authors Weekend, I felt like this was the perfect time to talk about this topic. Um, my name is Jaden Doye, CPA. I own Prestige Accounting Solutions as well as Prestige Academy, so where we help entrepreneurs become more profitable, but also pay less to the IRS. And oftentimes I see very creative people go into their own business, but they're not working in their best interest when it comes to being in the right tax entity or taking advantage of the many tax deductions that the IRS allows you.
Yes.
Um, The IRS does provide an interesting amount of insight on their website, but they're not going to walk you through exactly all the tricks and tips. They give you just enough so you know, so you can't say you didn't know, but they won't go into detail. And so professionals like myself, that's where we come in to go ahead and educate. So we have a pretty hefty presentation today. So I'm going to go ahead and get started, and so that we have enough time at the end for Q&A. So if you could, everyone, as you come in, make sure that you click mute. Your mic will be hot as you come into the room, and we can hear your background noise. We don't want to hear you at the restroom or on your way to work or wherever is going on in the background. We want that to stay on the background. We want everyone to hear this presentation today. So let's go ahead and get started. Today's presentation is called S Corporations, to be or not to be. That is the question. All right, so let's just talk about the agenda so you guys know exactly what you guys are going to be learning today, so that there's no questions about that. We're going to talk about self-employment tax in general. We're going to talk about an LLC versus the INC versus a corporation, S corporation, something called a reasonable compensation, 12 things that you need to be careful on your tax return or record keeping, and other topics for you guys to consider. All right. So what is self-employment tax? We'll get into the importance surely enough, but I think it's first important to educate you on what exactly that is. So self-employment tax is for the self-employed, also known as sole proprietors. This is where you will receive a 1099. Previously was called the 1099 miscellaneous with the amount in box 7 or 3. And now they have changed the 1099 form and it's actually 1099 NEC, non-employee compensation. This income and expenses are normally filed on Schedule C on the 1040, which is your individual tax return. So when I ask prospects, did you file 1 or 2 tax returns? The reason why I'm asking that is because I want to know if their business income and expenses were filed on their personal return, or if in fact it was filed on a separate return. That'll give me insight on what type of tax entity they're in. So when you're filing a Schedule C on your 1040, you are the employee and the employer. So in case you didn't know, employees have a mandatory 7.65% withheld from their paycheck for Social Security and Medicare checks. Employers match that 7.65%. And then they remit both amounts, which is the total of 15.3%, to the government. All right, they remit that over to the government. And so when you guys look at your paychecks, if you have a W-2 and you're like, man, I file exempt and they still take taxes out. Yes, indeed. Social Security and Medicare is mandatory. And when you're self-employed, you're paying for both parties. So let's do an example, shall we? If you have $100,000 in profit, meaning your income minus expenses, it's subject to income tax, so your ordinary income tax and self-employment tax. Okay. So if your income tax rate is 22% and your self-employment tax rate is 15.3%, then you're paying 37.3%. So that's 37,300. All right. This, I want you guys to keep this number in mind. All right, because we're going to use this example in future slides in this presentation. Okay. So keep in mind, this is someone who made $100,000 profit in their business and is filing on Schedule C of their personal tax return. All right. In order to save taxes as well as have the legal benefits, you need to be organized as a separate legal entity. So the three state designations are LLC, which is the most commonly chose, incorporation, and then corporation. This is done for legal and tax purposes. Now, nothing said here today is technically legal or tax advice. You'll want to consult any information that you get here for education purposes with your appropriate provider, whether that be your attorney or your CPA. Welcome to those who are coming in. Welcome. Today we are talking about to be or not to be an S corporation. As you guys are coming in, your mic is going to be hot, so please press mute so we don't hear your background noise. All right, so by default, the LLC takes form of the number of owners. So if you have one owner, then it's a sole member LLC, and that's going to be filed on Schedule C by default. And multiple owners is going to be filed on Form 1065. Okay. Again, solo single member LLC by default goes on Schedule C. Multiple member LLC by default is filed on 1065. That's a partnership tax return. That's completely separate from the individual tax return. Now, by default, an INC or corporation must file as a C-Corp no matter how many owners are in the business. So when people go and they start businesses without consulting a legal representation or a CPA, I've oftentimes seen people create something and then they put Inc. So Jaden's umbrella is INC. So by default, when I create that entity, I have to file it on Form 1120, which is a C corporation. All right. And that, with the new tax law, has a flat tax rate of 21%. So, and it's not a pass-through entity. So it's not favorable for small businesses. Now, one of the requirements of an S corporation is that you have to pay yourself a reasonable compensation. How is that defined by the IRS? That's a great question. I'll read it to you. They define it as the value that would ordinarily be paid for like services by enterprises under like circumstances. Reasonableness is determined based on all the facts and circumstances. So let's say you decide to go and start your own restaurant. And your role in this company is restaurant manager. Reasonable, when they're looking at reasonable compensation, they're making sure that you're paying yourself a reasonable compensation based off of what restaurant managers get paid locally in your area, as well as based off of the financials of the company. So if you have a net income of $500,000 and you only paid yourself a salary of $20,000, that's not reasonable. Restaurant managers get paid much more than that. Okay. So a lot of people will convert to an S-Corp to save themselves the self-employment tax, but what they don't do correctly is pay themselves a reasonable compensation, and that can trigger an audit. All right, so let's talk about the S corporation in particular. So I hope you guys are ready, got your pen and paper out. In your notes section, I'll give you a second to get ready to take notes. All right, so an S corporation is a federal designation. So you can elect for your LLC, Inc., or corporation to be an S corporation. So you have your legal entity that you establish with the state, and then you can tell the IRS how you want to be taxed. Okay, so Jaden's Umbrellas LLC, if it's a single member LLC, by default, I'm taxed as a sole proprietorship on Schedule C, subject to self-employment tax. I can elect to be taxed as an S corporation, but I still keep the legal entity the same. Okay, I'm still technically a limited liability company being taxed as an S corporation. All right, so in order to get this status, you must elect it by filing Form 2553 within 75 days of formation or within 75 days of the beginning of the year to which it's to be effective. What does that mean? So if you wanted your business to be taxed as an S corporation for 2021, then you needed to elect for that to happen as of March 15th of this year. Now, granted, if the deadline is missed, it is possible to do a late election. However, if you don't know what you're doing, you're going to do it wrong and it's going to get denied. And you'll still be subject to self-employment tax. So make sure that you're working with a tax planning professional as you are looking to convert on over to an S corporation. So what happens is when you elect to be an S corporation, that wipes having to pay that self-employment tax clean that you would have had to pay as a sole proprietorship. So remember that example we gave earlier where that person made $100,000 and their tax liability was around what, 37? That same person, if they converted over into an S corp, their tax would only be $22,000. Now, everybody asks, when is it recommended that you switch? It is recommended that once you have net profit of at least $25,000, that is a good time to switch. Now, I agree with this notion. I think that it's important that we understand getting to $100,000 in gross revenue is not as difficult as people make it seem. As we are starting these businesses and we're starting these brands, it's important for you guys to dream big, have a big vision. So you're not just planning for how to get paid this month, you're planning for the business that you want to have 5 and 10 years from now, okay? Now let's move along to administrative tasks. So I alluded to it earlier, you have to file a separate tax return that's 1120S. At this point, you definitely don't want to do it yourself. This is not like back in the day when you only had 1 or 2 W-2s and you can do this on TurboTax. If you own a business, it is very important that you are working with a tax professional that knows how to handle business tax returns. And I don't mean those tax professionals where you give them a list of expenses and they plug it into the tax software. That's nothing more than a data entry clerk. You want to work with a tax professional that is going to actually verify these numbers. So in the event of an audit, you know that you're covered because they have backup for it. All right, you also have to have payroll. This is never something that you want to do manually unless you're a certified public accountant and you've been doing this for years. I've had to do manual payroll for a few of my clients because they only run 1 payroll a year. And I despise having to do it, honestly. But you have to have payroll. And if you need a connection with the payroll company, Gusto actually will pay you $100 if you sign up using my affiliate link. And if you shoot me over an email, I could send you that affiliate link for you to sign up. You definitely need to have a separate business bank account. And I don't care if you're S-Corp, C-Corp, LLC, sole prop, whatever entity you're in, you need to have a separate business bank account. Do not commingle your funds. All right, so the next slide I want to talk about is 12 things on a tax return you want to be careful with. Now, last year, a few minutes ago, I told you guys one of the most audited categories are meals and travel. So you want to be careful about large deductions for meals and travel if it's not ordinary for your profession. If you own a home health care business and you put $50,000 in travel, that is a red flag. The computer automatically will flag your account, and you'll either get a computer generated audit or a representative will review it and want to see more documentation. So what happens is, based off of your business code number, every industry has a NAICS code, a business code number. There's certain benchmarks that coincide with those industries, those business code numbers. And if you fall vastly outside of that, that will usually trigger a computer generated audit. Home office deduction. This is something that people have rumored will automatically cause a audit, but I don't believe so. As long as it's reasonable, you'll be fine. Now, where people go wrong is where they try to write off their mortgage. That's not how this is done at all, okay? So if you want to use a simplified method, then I would recommend using the safe harbor, meaning you can expense $5 per square foot. But keep in mind, you can't even take the home office deduction if you're not having a profitable business. But you guys don't have to worry about that because everybody watching this webinar has a profitable business. All right. You also want to watch out for having, when I say large income, I mean, the fact of the matter is a lot of people who are self-preparing their taxes, but they are at the income range where they're making over $200,000, the IRS is going to look at that and say, okay, this person makes all this money, but they're not paying an accountant or a tax preparer to help them with this process. They're more likely to have made mistakes or filling this out fraudulently, and that increases your audit risk. Okay. All right, so now let's talk about commingling. I talked about this earlier. Make sure that you have separate bank accounts. Do not pay your business rent using your personal bank account. Do not pay your personal expenses. When you go to the grocery store, don't use your business credit card or your business debit card. Do not do that, because then the IRS and the government looks at you and your company as one, and it's easier for them to invalidate your expenses. Rounded numbers on a tax return. I can't tell you how many times people will give me a list of expenses and it's like $100 for this, $500 for this, $6,000 for this. You clearly made that up. I know it, and the IRS is gonna. So give me the bank statement so that we can really validate the correct numbers. Having a couple is okay, but you don't want to do all like that. Also, rental losses. Now, this is great if you're eligible for it. A lot of times your rental property can actually cash flow in a positive manner. However, you won't have to pay taxes on it, meaning there's something called depreciation. So a portion of the total cost of the home is expensed every year. And if you do it right, sometimes that could be close to the income that you get, therefore it's a wash. And if you're not a real estate professional or you don't fall in line the mom and pop exclusion, then you're not going to be eligible for it. And your tax professional can go more in detail with that. Not reporting all of your income. All right, so let's talk about this real quick. A lot of people think that they could get away with not reporting the money that they're getting through Square, Cash App, all of that. Listen, the government already knows, so don't try it. I can't tell you how many people have come in for tax resolution because they only wanted to report wanted to report what they thought was going to be sent to the IRS. And little did they know the IRS already knew that they got $100,000 through Square and it wasn't reported. So now you're going to have to either redo the tax return or pay the taxes due. Having a high amount of charitable tax deductions is also a red flag, especially if you don't have any backup. If you are a Schedule C filer, you don't want to file more than 3 years of losses because then the IRS looks at you as a hobby. And when I say 3 years, I mean 3 years consecutively. According to their verbiage, they look at 3 out of the last 5 years. But if you're not generating a profit after 3 years in business, then are you really running a business? That's a question. Because at that point, how are you living? If you're reporting on your tax return, you made negative $12,000 3 years in a row, then how is it that you're able to pay rent? That looks like a huge red flag to the IRS. Using digital currencies or having a foreign bank account, this is not necessarily a red flag. However, you want to make sure that this is reported appropriately. Now, if you're a cash-based business, meaning you don't have any type of 1099s or any type of way to support the sales numbers that you put down, then you're going to be under greater scrutiny. Not filing your tax return at all is definitely something you don't want to do. Even if you think you're going to owe, go ahead and file. And there's things that you can do if you can't pay what you owe. It's actually a crime to not file. So don't don't try it. Make sure that you're filing on time. All right, so here are some tricks in order to save on taxes. Kids can actually work in your business. Now, the good thing about kids is, and paying your children, is that this is a manner in which you can shift income. Now, here's the thing. If your net profit is only $5,000 for the year, this doesn't apply to you, okay? We're talking about people that are in, let's say, the 20%, 30% tax bracket, and they want to shift some of that income off of them, then they can do so by hiring your children. You want to make sure that you have a valid work description, and you want to make sure that you are actually keeping track of their duties and the times that they work in case you're on. Another idea is to contribute to their Roth IRA. If you're a Schedule C, you can take home office expense. Now you could do it as an S-Corp as well, but it's just more work. Now something that you want to look at is called the Augusta rule, where pretty much you can rent out your house for events and, you can have business events or whatever you want to do, you can rent out your personal residence for up to 14 days, and that income does not have to be reported on your taxes. But you want to talk to your accountant about what is a reasonable amount to even do that with. Now, you guys, as we go through this presentation and you have questions, go ahead and feel free to put them in the chat. And then at the end, I'll address all of the questions in the chat if they haven't been answered already. Or if you prefer to ask your question live, you can write it down and then you'll have the option to do that at the end as well. All right, so the thing about tax liens is that if you have a tax lien, then a lot of times you won't be able to sell a property. That's actually happened to quite a few people in the nation, all right? Thousands of people. They can't sell their home because they have that tax lien on it. Pretty much the government says, this person owes me money and they're not allowed to move or get rid of this fixed asset unless it goes through me. And so what you want to do is you want to work with somebody that works in tax resolution in order to get that lien lifted and create some type of plan with the IRS. Let's talk about record keeping. So when it comes to keeping track of your mileage, one good app is Mile IQ. You can also, if you're using QuickBooks Online, download the QuickBooks app and set it up so that it automatically tracks when you're driving around. And then you can go in the app and mark it as business or personal. You want to make sure that you're keeping receipts and invoices because bank statements and credit card statements are not sufficient. So the good thing is that we live in a digital age. Many of your receipts and invoices received are going to be sent via email. So a good practice to have is as soon as it comes in, save it into a folder on your computer. You should at this point have some type of virtual file drive so where you can access it, whether you're working from home or in the office. And you should have a folder strictly for your receipts. And I recommend that because actually a lot of the paper receipts that we get, those can actually fade, especially if there's like a carbon copy. So that's not necessarily going to hold up in the event that you're audited 3 or 5 years from now. All right, so gifts. This is limited at $25 a person. You want to make sure that you're issuing 1099s to any individual that you pay over $600 within 1 calendar year. Keep a good record of your home office expenses. So those utilities and things of that nature, you want to make sure that you keep a good record of that. The meals previously was 50% deductible, but now it's 100% deductible. Entertainment is no longer deductible. All right, you guys, so enough of me talking. Here's my contact information in case you want to reach me. Please do not call outside of business hours. It's sad that at this point, I still have to give this disclaimer. But please do not call after business hours. Business hours are 9 a.m. through 5 p.m. Eastern Standard Time, Monday through Friday. Outside of that, you will never get an answer from me, okay? So let's get into Q&A, shall we? All right, so someone asked regarding PayPal. So whatever, I'm not sure what you mean, does PayPal count? If you could please expand upon that a little more about what exactly you mean by does PayPal count? The next question is, should our tax professional be able to help us collect, track, and pay state taxes? Okay, so when you say pay state taxes, I I'm not sure if you mean sales tax or your state income tax. If you could be clear on that, that would help, but I'll answer both questions just in case. So your state sales tax is, okay, so sales tax. So yes and no, it depends on who you're working with. Honestly, it's quite cumbersome for somebody that doesn't deal with it all day, every day. So for my clients that are e-commerce businesses, I have them use TaxJar. So they can go to taxjar.com and they have an integration with Shopify so that they automatically can calculate something called sales tax nexus, meaning in every state they have certain requirements as to at what point you have to register for a sales tax ID and remit, collect and remit sales tax. Not every state, but there's, various states have various laws. And so for one person to keep up with that can be very cumbersome, which is why I say use the experts and incorporate TaxJar into your business. PayPal does not count really as a bank. Honestly, it's more of a payment platform. I don't recommend PayPal in general. I mean, technically, most businesses have to use it because it's the only payment integration that integrates with certain applications. I get it. But PayPal is not very merchant friendly. Um, if someone were to dispute something, a lot of times PayPal will take the side of the consumer, even when you provide them with evidence. So you actually need a physical bank that you can walk into as a business owner and build a relationship with a business banker. Because as your business grows and scales, your banking needs are going to grow. And you want to have somebody that can be your advocate in the banking industry. So, right now you might not be eligible for a business credit card, or you might not even need a business loan, but at some point you might be able to leverage a loan or credit in order to pretty much have a cash injection in your business. And then let's say you want to run a marketing campaign for $30,000 and you've already done the planning and the work, and you verify that if I spend this 30,000, I can make 100,000 in 90 days. Well, that's great because then you can pay back the loan much quicker. Therefore, you're reducing interest rate. What a lot of people do, unfortunately, is that they borrow money blindly. They just say, I need a loan to start my business. I need a loan to grow my business. But they have no idea where that money is going to go or how they're going to use it, what's the return on investment, or how long it's going to take to pay that loan back. And so what ends up happening is that they hurt their business more than they help their business because they've taken out this predatory loan and then they're paying a high interest rate. So when it comes to a cash flow perspective, they're pretty much strapped. PayPal does a great job of doing this. They make it seem like, oh, take out this merchant account loan. You're eligible based off of your activity. We'll give you 5,000, we'll give you $15,000 and your fee will only be $7,000. And you're like, wait a minute, what? So by the time, so you borrow 15 and then you have to pay back $22,000. That doesn't sound like a good deal to me, especially if you don't know how much you're going to make off of that, nor what the actual return on investment is going to be, or how long it's going to take to pay it back. And with those merchant service loans, they take money out of every payment that comes through your account. They take a certain percentage of that. So it can be quite a nightmare if you don't have the proper profit margins in your business. All right, so Michelle, welcome. Your mic is not muted as you come in, so you want to put yourself on mute unless you have a question. All right, so what other questions do you guys have? I gave you guys a lot of new information today, so I'm expecting that you guys have questions. Feel free to unmute your mic. or put your questions in the chat. We got a little bit time to answer them. By a show of hands, hit the hand raise button if you have already elected for your company to be taxed as a S corporation or a C corporation. I guess I would be able to see the hand raising, right? Oh, it doesn't look like I see many hands being raised. So I hope I've given you guys some information that you could take to your tax professional. And maybe you're not ready yet, but at least you know what you need to know for the day that you do get ready. How does the saying go? If you stay ready, you don't have to get ready. I love that phrase. Adrienne, I know you have a question. How about you tell me the single best thing that you learned today?
Oh, so the sky just opened up over here, so I know y'all hear all this in my background, but no, it's interesting to hear the differences between having it, and it's funny because some of the stuff is I don't want to say is, I'm trying to be politically correct, but it's like, you know, that you need to have a bank account, but so many people don't separate out their bank accounts. Like, you have a business, but you're keeping everything in your personal account, or you keep everything in PayPal or Cash App or somewhere like that, versus getting an actual business bank account. And I know that you and I spoke a little bit before about, you know, how this business credit has become kind of like the next thing now. Like, everybody's focusing on business credit and let me help you get your business credit and, you know, all this other kind of stuff. So I think it's important that everybody, you know, take from this conversation the importance of actually knowing about your business and your business credit, and knowing the credit that you need. And it's just not a vanity to have it. Like, if you have 12 business credit cards, but you aren't using any of them, or you're using them for personal stuff, you know, like all those nuances that come with having an actual business.
So great. Thank you for providing that insight. And you have triggered two things that I want to talk about. One of them being the whole idea of business credit. Okay. If anybody here is a business credit guru, I'm sorry, but I'm about to burst your bubble. Okay. So a lot of the people that are selling you on business credit are kind of selling you on a model that is pretty much outdated, truth be told. If you do not have good personal credit and you take this model, this tiered model that people are teaching you, you're only going to be able to get so far. You'll be able to get a Quill, a Uline, you might be able to get a few net 30 accounts. But when it actually comes to getting cash for you to catapult your business, you're going to have to be a personal guarantee. That just is what it is. Unless you have $1 million business and have been in business for at least 2 years, and oftentimes they look for you to have at least 10 employees, then you're going to have a personal guarantee. So I recommend working on both at the same time, your business and personal credit. But I don't believe that people should start opening these business credit accounts that don't fall in line with your business. Like, I think the idea of getting an account with Shirtsy and buying a bunch of shirts, or getting an account with Quill and ordering some overpriced office supplies that you don't need and will never use for 3 months, that to me doesn't make sense. I mean, even if you put $200 to that, you could put that same $200 to maybe some advertising, some Facebook ads, and that could lead to at least one lead. So I think it's really important for us to be very, very intentional with every dollar that we spend in our business. The other thing that you mentioned is Cash App. I did a post the other day on why Cash App should not be used in your business. And I don't know why people felt like they should argue with me on this. You know, it's a fact. Cash App is not good for business. It's not, it was never originally made to be a payment platform for business owners. Yes, they will convert your account to a business account if you have excess activity, but that platform was created to send money peer to peer. So when you go out to eat, and it's 10 people and the bill is $300 and people don't have cash, people can easily send the cash through virtually to one person, especially for those places that don't do split checks. I'm sure we've all been there before. At this point, I just always make sure I got the nice credit card with the big balance, because I know that everybody else don't have that balance on their credit card, right? And then they send it to me via Cash App. That's personal. We don't want to mix that with business. Also, Cash App doesn't have a customer service line. So if something goes wrong, who are you going to call? Third, Cash App has been known to have a lot of fraud. So, and they don't have certain provisions or protections in place in order to protect business owners in case of that. So those are just some of the reasons that I don't recommend Cash App. I find it to be very unprofessional when somebody tells me that that is their preferred method of payment and they actually run a legitimate business. I immediately look at that person as someone that has a hobby and not a business at that point. And let's talk about alternatives to Cash App. So you have Square. Square has great tools, and Square actually owns Cash App, so you might as well just work with who you need to work with, who the parent company, because they have the parameters in place to support small businesses. So previously, before having a CPA firm, I owned a financial life coaching business, and I was able to have appointments scheduled through Square, my payments through Square, invoicing through Square. Um, and it was a very easy platform. They provided me with a debit card as well. And then PayPal is another option, even though I hate PayPal. It just is what it is, you know. All right, so how about Kathina? How about you tell me the single best thing that you learned today? And then I'm gonna ask Corey.
So I was appreciating the information that you shared in regards to um, the income, as far as filing over into S-Corp and a portion of that being a wash, and how the taxes were dropped from 37,000 to 22,000. That's great information to know, because if you don't know that, you're paying unnecessarily. And the government's not going to tell you, oh, here, we're going to give you this money back. They're just going to keep it and do what they want to do. So that was very valuable.
Absolutely. Thank you for that. All right, Corey, how about you? Oh, Corey might be driving. Charlene,
No,
welcome.
what I
Oh, okay.
learned from you is that the profitability, I said that word so wrong. The net profit of at least 25,000 is when you should start getting the S-Corp and the ability to do payroll. The only question I have is that when you are starting off and you're saying keep everything separate, somebody that's under that realm or under 50K right now, how do they pay themselves from the business, or they just keep everything as an investment?
What they would do is pay themselves a distribution of profit. So those are the two different ways in which you can pay yourself, essentially. You take distribution of profit or you pay yourself a payroll. But I would actually recommend, yeah, so that's how you would do it. You would cut yourself a check. Let's just say you need $4,000 to live a month, right? Your business needs to be pulling in at least $10,000 a month in order for the business to be profitable, and then for you to have the money that you need to live. So when we separate out our accounts and we create a system to which we pay ourselves, we take out a distribution of profit twice a month, then this forces us to look at how we operate our business differently versus keeping everything together. And as long as there's money in the bank, we're good to go. Because if every time when it comes time to pay yourself a distribution of profit, let's say in this case, this example, you pay yourself $2,000 a month. So twice a month, you pay yourself $1,000. If after you pay yourself that $1,000, there's only $300 left in the bank account for you to operate your business with, that's going to trigger the thought that you need to make changes in your business in order to generate more of a profit.
Thank you.
You're welcome. All right, Kathina, you're up.
I just went. What'd you want?
Oh, oh wait, you did, right? Okay, yeah, I meant Charlene. Sorry, not Kathina. Sorry.
Thought I got out of that one, but
Nope.
for me, it's finally I realized that I need to get to the 25,000. And for me, okay, is that for us to be profitable, or our business makes it period? Is bringing in 25,000 period?
Net profit being 25,000.
Okay, and then we can switch over to the S-Corp.
Well, you could switch over earlier, but it's just recommended that after $25,000 in net profit, then the cost that it will cost you to have someone to keep this up throughout the year and keeping up with compliance and payroll and things of that nature.
Right.
You see more value in it after you have about at least $25,000 in net profit.
Okay, which I appreciate, because a lot of times you just hear a lot of people say to switch, and then I always feel like there's stuff in the background that they don't tell you. So, okay, so now I'm prepared.
Right. Yeah, so your goal should be to, the first milestone is going to be hitting that 6-figure mark. So creating a business model to which you can generate at least $10,000 in gross revenue in your business without having to work over 40 hours a week.
Gotcha.
So, we've been going through this 5-day challenge, and it's been causing you to think about different ways to change your business. Incorporate that goal and that milestone in with that.
Will do. Thank you.
You're welcome. All right, Mr. Watkins, are you here? Miss Taylor, are you here? Got it.
Yes,
All right,
I'm here.
I got you, Miss
I'm here.
Taylor.
Mr. Watkins.
All right, Mr. Watkins, tell me the single best thing that you learned today.
I learned a lot of tax information. Apologize about the background there, sitting in the barbershop. But I have a lot of, I learned a lot in essence to the tax, especially the S-Corp. I just filed and just completed my LLC. It's been January when I first decided to go into business. So right now I'm still starting out and getting a lot of these things in. So the challenge, just not joining, I was told by Miss Charlene Brown to come to your challenge and get some information that I needed. But just really having the time now, in essence, of narrowing down my niche as into where my pay will be toward individual consulting and group consulting. So that's the thing I'm kind of working on now. So I'm looking for getting information upon that and to kind of drive my business, because I have a couple of overseas clients that are signed up, and I'm not really sure how to be charging them in relation to what they're asking me to do.
Right, so that comes in the business planning process. So part of the business planning process is to complete a SWOT analysis, and that'll make it so that you have to research your strengths, weaknesses, opportunities, and threats. And while you're doing that, you're looking at who the top 3 competition is in your arena, in your area, in your industry, all that good stuff. And while you're doing that, you're looking at their pricing model, and you're looking at where you fall in line with the value. Are you providing more value, or are you providing less value? Is your mission to be the cheapest, or is your mission to have transformation? If your clients can get transformation, the same transformation in a group setting versus one-on-one, it would behoove you to create a group setting for the service that you provide. I learned that very quickly doing coaching. I was doing the same thing over and over again. And I'm like, you know what? I just need to get all of you on the same Zoom call because all of you have the same problem. Let's just solve all of it at the same time.
And that's really what I'm going through now as well.
Yeah.
Like you said, hit it right on the head because I got some people that I'm doing one-on-one with, but I'm doing the same work and I have these people here that's going to put everybody together. Collectively, it's been kind of hard to do that because they're not in the same place. That's something that I can work on in my business plan. So it's in the same locale, so I can't do that like that.
Yeah. Well, you're going to have to be very clear on who it is you serve, at what point of the process you serve them, and maybe have different tiers of service. So I have one program that is only for business owners that generate over $250,000 a year in their business. And they're really looking to grow and scale and create the framework in order to do so. They already have employees and they need to create a built out organizational chart and things of that nature. And then I have a program that's more for the businesses that are at least $50,000 a year and maybe in income, and maybe they just need to do a regroup. So the first 4 weeks we work on the mindset, and the second 4 weeks we do implementation. So we can get them either over that 100K mark or from that 100K to that 250K mark. So you know, the speed of the students is going to be based off of where they are in that journey. And so you have to make sure you're very clear and determine at what tier somebody is, and that'll determine what program offering they are so that everybody in the group program can go at the same speed.
Thanks so much. I appreciate it.
You're welcome. Yeah, the whole idea of counting business losses on your taxes, you guys, we got to get out the habit of doing that. We got to get out of that mindset and be willing and understand that we can actually report income and not pay a bunch in taxes legally, as long as you do it right. As when you're self-employed, you have to pay your quarterly estimated tax payment. So you're paying taxes 4 times a year. Actually, the next estimated tax payment is due June 15th. So you want to talk to your tax professional about that if you're running a profitable business. And then when you file taxes, now that you're a business owner, the whole goal when you file taxes is to break even. The idea of getting a $5,000 refund, that's old news. You either, if you're getting a tax refund, it's either one of two things. Either you live in poverty or you overpay taxes, neither of which you want. So in order to have that life of abundance, you have to be willing to do the work and just pay your fair share. I know a lot of people that make over 6 figures with an effective tax rate of less than 15%. It's very possible, and it's not too much of a hard work if you're working with the right person. All right, I want to hear from Sharonda. What was the single best thing that you learned today? And then I'm going to go to Lauren.
I would have to say the single best thing I learned today is that I absolutely cannot do any of this by myself like I thought I could. Learning about taxes, whether it's a personal level, doing the income taxes, or from a business perspective, always makes me go cross-eyed. So me thinking it's as simple as filing paperwork to get an LLC for whatever brand I'm trying to build, it doesn't stop there. So this definitely was insightful, just to let me know that it's more than just your name on a nice piece of paper with a business license. There's more involved in it, and I can do it by myself, but I don't have to. And there are resources out there to help me not only just explain things to me in layman terms, but also do the work for me that I can't do for myself.
Yeah, you are actually, most people think they're saving money by doing it themselves, but you're actually costing yourself more money, because this is how I break it down to attorney clients that I have. If your billable rate is $500 an hour, and it costs you, and it takes you 10 hours a month to do your own accounting and get ready for taxes, then you're losing $5,000 a month, when the accounting fee is going to be much less than that for accounting and tax planning. So when people think that they're doing it themselves, they're actually taking themselves away from whatever they're called to do in their business and generate money that way. So certain things I'm not willing to do. I could do my own contracts. I could find a template and make edits, but no, I'm going to pay my attorney whatever his rate is so that he can make the edits, even if it takes him 2 hours. I don't care. You do that because it'll take me all day. This is not my wheelhouse. This is not what I do. So I can spend all day doing that, or I can spend all day making money in my business. The same thing with hiring a house cleaning service.
Come on.
I'm telling you, if you own a
Come on.
business, if you work in your business full time, you need meal prep and a house cleaning service. You should not be doing your own laundry nor cooking your own meals. And I'll tell you why. When I do laundry, it takes me all day. Not only does it take me all day, it takes me like a 3-day period, okay? 1 day to like wash and dry, 1 day to fold, and then 1 day to put away, all right?
Exactly.
So I tried to do different ways, and I thought about it. It takes me anywhere from at least 6 to 8 hours to do what I need to do to clean my house and do laundry, at least, okay? So let's just say 8 hours.
Yeah.
My billable rate is $250 an hour. So $250 times 8. So I could be doing $2,000 worth of work on a Saturday, or I could be cleaning up, which I hate doing.
Yeah.
So yes, I'm going to pay $150 for her to come clean this house and do my laundry.
Right. And seeing your meal prep, that's not even counting the time it takes to do the dishes. Doing your laundry, that's not even counting you sorting the stuff out to go to the dry cleaners. Like, it's a lot of moving parts. So I absolutely understand.
Yeah. So Carl, to answer your question, how can you take advantage of grants? I would recommend contacting the SBA or contacting a grant writing company. That's outside of my wheelhouse, but I hear them talk about it all the time. You want to definitely work with somebody that can fill out the application and do the proposal for you. And there are grant writing companies that specialize in doing that, have been doing that for years. All right, over to you, Lauren. Let me know the single best thing that you learned today. Oh, wait, was Lauren the... No, it wasn't. Lauren, you there? You with us? Oh, okay, maybe not. All right, Michelle, are you there? Did you catch enough, Michelle, to let us know the single best thing that you learned?
All of it was very helpful. I had some technical difficulty coming in, but just listening to all of it is very helpful. I'm going to have to definitely circle back and re-listen to everything that was spoken here.
All right.
Thank you.
You're welcome. Sounds good. So we are coming up on time. Does anybody have any last minute questions before I pass it back over to the host? Unmic now, forever hold your peace. All right, I'll take that as a no. Well, back over to you.
Jaden, it was a pleasure having you. Thank you, everybody that participated in the workshop today. I hope you guys learned a lot. He dropped tons and tons of jewels. Jaden, drop your contact information so that people can potentially reach out to you for advice to turn into another potential client for you. How do they find you?
Yeah, actually, it's really easy. If you text CPA to 21000, so I'll put it in the chat. Text CPA 21,000. You'll get all my contact information, and you can go from there. If you want to schedule a call, you'll hit that schedule a call button. It's an hour-long call. It is a paid call. I don't do free consultations. So be ready, have your questions ready, and make sure that you're ready to get value if you would like to schedule a call. You'll also get connected to my social media channels so that you can continue to see when I host other events like this, and my website, where you'll be able to see the other services that we offer, as well as more about Prestige Academy. So thank you all for your time today.
Thank you, everyone. Enjoy your evening. For the gold and silver pass holders, if you would like to go to the next class, check your emails. Everybody have a great day.